Jeff, thanks for taking the time with me today. For those out there that don't know you, can you give a little bit of background on yourself?
Sure, just very quickly, 25 years in the energy infrastructure sector in America and Europe. I've done work in Asia as well and certain parts of Africa.
Great. Well, we've just come off an amazing event in Berlin.
Indeed.
Yeah, put on by PEI on their infrastructure event. And I just thought we would sit down with you and get a little bit of your perspective on the entire event and what were some of the key themes that you saw at the event and, kind of groundbreaking new ahas that you had.
So I think there's been a lot of recognition that the market has changed dramatically, considerably when it was 10 years ago, with respect to what are the challenges and opportunities. First of all, we're seeing a great amount of capital now coming into the market. As such, we're seeing a lot of competition for opportunities themselves. With that, however, we're seeing a greater amount of complexity with regards to regulation, with regards to political risk, with regards to social backlash in many cases, and with regards to technological innovation. And with that, now you're seeing more compression on yields as prices are going up, and investors are looking for new ways to create value, either becoming more efficient in what they do or diversifying into various geographical markets or into sectors that they haven't done so beforehand.
So one of the big themes of the conference that the conference kicked off with was ESG. It'd be nice to just get some of your takeaways from hearing what LPs were saying about the growing importance of ESG and also how managers today are really reacting to that.
Well, I think first of all, ESG from a European perspective is a mainstay itself. Investors have to be involved in ESG, not only from a reporting perspective, but actually create real value and look at investments from an ESG perspective. I think one of the takeaways that I heard is looking at an investment at your existing portfolio and future investments, how would you look at that investment opportunity or portfolio itself from a social perspective 10 years down the road, 15 years down the road? A very, very subtle point, and one which many managers took into effect, but now is becoming even more important as society is starting to look very carefully at managers and how they invest itself. The second takeaway, I think, is that when LPs are speaking with GPs, the one thing that I think resonated with two major LPs is that when they want to hear about how an investor or how investment manager has made a decision from an ESG perspective, the last thing they don't want to hear is go speak with our ESG officer or IR officer itself. So what they're saying is, you need to tell me why you made this investment, you need to tell me what changes you've made to improve this company from an ESG perspective, and then you need to report that properly to me. I think the third theme is from a reporting perspective, which is there's not a lot of standardization yet out there in the market. And with respect to that, that is evolving in and of itself, where your company is playing a very big role in that, I might add. But that is going to be very important. And from a European perspective, even the EU Commission now is going to be requiring that, or will be requiring that, of investors themselves. I think you'll see that occurring also in certain countries, particularly in North America and Asia later on afterwards.
Yeah, it's interesting when you talk about the growing need for transparency and the growing need for standards. I think it all does start from how organizations are trying to centralize data and how the growing importance of data is becoming, multifaceted, whether it is around ESG, whether it is around finance and risk, all kind of coming together. And I think one of our observations is that managers are making that mission critical now. And I think that's happening across the regions. And when we think about that, and we think about the way that LPs are now demanding more of that information, it's a perfect complement of your takeaway. So I think that's absolutely right.
Yeah, if I could just add to that too.
Please, yeah.
To me, I think what's important is the data itself creates basically alignment and ubiquity across the whole board. And without that, you can't have an investment manager being aligned inside the whole investment process itself, along with alignment with the LP. And so having that data is basically the ecosystem of supporting the whole ESG movement itself and creating ubiquity and a standardized platform in which people can start setting targets and reporting on what those accomplishments are or aren't.
Well, thanks for talking about that, because interestingly enough, we at the conference announced a major strategic alliance that we have now with GRESB, where we're helping them create a data standard related to how infrastructure assets are submitted to them for benchmarking and done in an automated way. And why do we think that's important? Well, the infrastructure itself as an asset class has been pretty complex and bespoke and pretty problematic for asset level reporting.
Absolutely.
Which is quite frankly how we were designed, sort of from the ground up. And so why we're partnered with them is to really be able to give them a much more methodical way for managers to be able to now report and collect that information so that they can, take away weeks and weeks of time in making those submittals and to do it in an automated fashion. So it's, I think it's such an important trend. Yeah.
Agreed.
So now that we've talked about some of the conference, you were the chair at the Energy Transition Forum. So I'd love to just hear about some of your bigger takeaways and ahas that you had when you were, kind of mixing around all the panels and hosting them.
Well, again, I think just the fact is that you're looking at a portfolio, you're making investments, you have to understand where power curves are going, where the markets are going, where pricing is going. And then because renewables themselves are intermittent power, you have a daily forecast as to where things are going. So you need to understand where your portfolio is and how it's performing across wherever diversified countries you may be in itself. So data plays a big role, but also from the investment side too, as a lot of people are building out a lot of new greenfield projects out there, managing and overseeing those projects to ensure that they're on time and at cost are very, very critical itself. And then how you report that also internally as well as externally to your investors and also to all stakeholders is essential as well.
Yeah, we gave a presentation during that time as well, and one of the things we talked about is sort of the growing importance of data, but more that it's in a second generation from our view. We call it Big Data 2.0.
Right.
And the reason why we called it that is that we see, in the past in our industry, especially energy, that the technical side of data, the operational side of data, has always been what the industry tried to optimize. And what was interesting was that we've seen a trend where more and more companies are focused on the transition of taking technical data and merging it with financial risk and now ESG data to all be in a central place that you can actually, in fact, get much more out of, how your performance are risk adjusted and how strong they are in environmental, social and governance. So at a whole, we think that having a centralized place, for data and being able to do something with it will help both, sort of better prediction of risk adjusted returns, but also just as important, it allows you to be forward looking, not just, kind of rear view looking.
Well, let's just put it this way. Yeah. Going forward, it's a prerequisite to be in this business. If you're not in this business and don't manage data properly, you'll be out of this business. Ultimately, someone will probably buy you out.
Yeah, that's right. Well, thanks for your time.
Thank you.
It's nice to have these, sit downs right at the end of the conference, especially, and I hope that the people listening to this will get a little bit out of it, and we'll look forward to the next time we sit down together.
Appreciate it. Thanks, Tim.
Great.